there's nothing to be really comfortable about. You just have to be aware that at any point you could have a pullback in the marketplace, given where valuations are currently. And obviously, the rising situation that could be an impediment on the economy with rising cases of coronavirus again. But with that said, offsetting all that is incredible amounts of liquidity that are just driving the markets higher, and the market's discounting a lot of this bad news already. So one of the things that I have been talking to investors about is convertible securities as being a midway point of having investments with equity exposure, but not taking perhaps as much risk as owning the underlying equities.
So Dan, I just want to stop there, because we're talking about convertible bonds. Convertible bonds, just for those, we know many viewers know what they are, but for those who don't, they're basically like hybrid bonds, right? They're bonds with a conversion factor that lets you get stock at certain points in the bond's life. It's a hybrid. If that's the case, does that mean that you're taking a very hedged approach to the market? It seems as though you don't have a lot of faith in the upside if you're looking at bond and stock hybrid investments and not just stocks.
That's not a very hedged exposure. You're just really, if you're unsure, if you missed perhaps some of the rally here and you want to get involved, this is perhaps a good way to get involved, because you have more downside protection in the event that you have a pullback in the market, because you typically have about 50% of the downside participation of the underlying equity, while still preserving about 70 or 75% of the upside participation. So you're really taking an asymmetrical view on the markets. Plus, the convertibles universe today is over 50% in technology and healthcare, which in my opinion continues to be the two sectors of the market that you want to stay fully weighted to in this environment right now, because technology, we've got the forced use of technology because of all the different ways that we're living, and we've talked about that before. And within healthcare, clearly a cure to this pandemic resides in our healthcare system, vis-a-vis the biotechnology industry or the ecosystem that surrounds all that as well. Many of those companies issue convertible securities, and that's a very good way of playing it right now.
You mentioned something interesting to me in the beginning of our conversation. You said you haven't been comfortable in 25 years. It brings back the whole cliche about markets climbing a wall of worry, bull markets climbing a wall of worry. What exactly then does worry you? What is it that you would say could take this market down, given the ample amount of cash in the system, thanks to the Fed, the European Central Bank, Bank of Japan, everybody else out there?
Well, look, we had an extraordinary decline in the first quarter and an equally extraordinary recovery so far. So we're roughly around even, but I'm seeing very optimistic signs of the market broadening out. With that said, at any point in time, news flow could impact, macro flows could impact stocks. And of course, we're in an election year, and that just creates a much more volatile situation. So I've put a pretty wide range on how far that pullback can be. As little as 5%, simply because of the extraordinary amount of cash and somewhat of a negative bias that most investors have to the market right now, or as much as 15%. I'd probably gear more towards the 5% camp right now, simply because with everybody looking to get into the market that perhaps missed it, how far down can really equity prices go?